Let's talk more about Meta. The stock has had a few challenging months in the recovery from the big sell-off in June. In the big tech world, Meta is the only stock that is still down from 3 months ago. And investors are wondering if now is the right time to buy. Joining us now is Paul Meeks, Independent Solutions Wealth Management Portfolio Manager, and Dan Flax, Neuberger Berman Senior Research Analyst. Good to see you both. Paul, I'll start off with you. What is wrong with Meta? I mean, every single stock got a bid from June lows except for this one. Does it have sort of an existential moment on its hands with its shift toward metaverse at this point, which nobody seems to really have a good grip on in terms of what the game plan is there, and the inability to monetize Reels, which it must do if it's going to compete against the likes of a TikTok?
Excellent question. Well, the deal is, the legacy digital advertising business is under a lot of pressure. And this business is going to be, just based on the peculiarities of it, is going to be under more pressure for Meta than it is even for Google. And so that's going on. And I'm not of the belief that we'll be in and out of this recession quickly. So I think there's continued pressure there. Then, of course, just what you said, the company is going through a metamorphosis. It is a really big and important one. What is the metaverse? And once we get to the other side, what is this company's position in it going to be? It may not necessarily be the dominant player as it was one time in its legacy social media business. So there's some wrenching changes. In the meantime, if you believe Wall Street analysts, earnings per share this year are going to decline by 40%, and the stock is trading at about 18 times earnings. So even given the fact that it's still the weakest among the FANGs, I don't know if it's an opportunity yet to go bargain hunting in this name.
Dan, how do you think about the multiple at this point? Is there anything in the multiple for the metaverse, for instance, or is that sort of just a call option, so to speak, on something that could materialize in the future? But you don't need that part of the picture to materialize in order for it to be at an 18 multiple, or however you view that multiple right now.
I think the metaverse is really an option. I don't think much of it's embedded in the price. Mm-hmm. The company is in transition. And so my focus is the innovation and the growth. And while Instagram is healthy, core Facebook is quite mature. And so Facebook needs to do more to appeal to users in their teens and 20s and really pivot the organization as the paradigm shifts to more short-form video. So we obviously see success with TikTok. And so what we're looking for is whether this company can shift the business and become even more relevant to users and advertisers in order to grow. Our preference in this space is on Google, where we like the durability of search. YouTube has good growth prospects, and we think there's significant opportunity in the Google Cloud platform.
So, Dan, in your view, the lackluster performance of the stock relative to peers is an indictment on a declining core business and just the challenges the main business faces, as opposed to its gamble and spending on a part of the business that may never materialize?
The challenge the stock faces is really driven by this tougher growth outlook and the inability to generate the same levels of free cash flow, given how much they have to invest to pivot the company. And so Mark Zuckerberg and the leadership team clearly have a very strong track record. But given the shifts in the industry, they're going to have to invest even more. In terms of the metaverse opportunity, we'll have to see how they do. And part of it, I think, is going to reflect perhaps a new business model. You need different strengths, different DNA, if you like, to sell devices rather than just services. So that's something we're watching very closely.